Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and I'm joined today with Sam Kawtharani, and he's the CEO of Corl. And we're going to be discussing security tokens today. This is the first company, the first mover on the Polymath platform. And this is going to be a really exciting thing because I believe this is going to be the trend going forward, moving away from the legacy system and onto this blockchain decentralized platform. And I'm really looking forward to picking Sam's brain here and seeing why he decided to go on the crypto space versus maybe the traditional platform. This company is Corl.io. And yeah, let's get into it. Sam, thanks for coming on CrushTheStreet.com with me today.
Thanks for having me, and I love the name of the podcast.
Thank you. Yeah. Well, first of all, maybe let's get to know you a little bit. How did you get into cryptocurrency, and what is your interest with Bitcoin and the crypto space? And obviously, that led you to what you're doing today.
Cool, yeah. I mean, I'm originally a software engineer, but that managed to transition to the product management and product creativity side of things of the industry. And then I've worked in the fintech industry before fintech became popular, right? So I've worked in the peer-to-peer industry and lending and payment processing. And at that point, Bitcoin came out and the whole blockchain thing started becoming a hype. But as like a lot of people, I was kind of skeptical about what's going on. So I kind of started doing my own research and getting to know it better. At one point, I started trying to implement it within the peer-to-peer lending industry, right? So I was trying to kind of change it and bring it into our previous company. But at that point, the strategy of the company was completely different off the blockchain. But I remember the first project I worked on was a small demo project, or like a demo startup where my friend and I were working on. We were trying to create a coin for donations based on Bitcoin, basically. So like an international currency for donations. And that's like I kind of started getting into crypto just as a learning project. But over time, I kind of started believing more in what we're doing as a mission and having a product that's going to support startups, raise better capital. And then the idea of Corl and tokenizing and crypto came out. And we get to talk about it in a bit, I'm sure.
Absolutely. Well, 2017 was the year of utility tokens, as we all know, with Ethereum and the tons of tokens that came out on that platform. Many are saying 2018 and going forward is going to be the year of security tokens. And that's as opposed to the traditional legacy system. And I can just tell you, from my own personal experience dealing with traditional stocks, traditional equity, even now, trying to invest in cannabis stocks as a U.S. person, blockchain, everyone's unsure of what's going on and purchasing, buying and selling stocks, traditional stocks related to blockchain, related to cannabis. It's an absolute nightmare with the regulators. And I know people have gone on to blockchain solutions or these decentralized platforms because of the problems that existed in the traditional space. But I'd love to get your thoughts on why you believe the security tokens are going to be the way of the future and why you guys decided to go that route.
Sure. I mean, if you really look to the bottom of things or under the hood, none of those utility tokens are actually utility tokens, right? And that's why the SEC just labeled everything as a security, assumed everything is a security token, and why there's almost 93 subpoenas by the SEC at this point for people who kind of package their utility token as a security. Bottom line, if you just go back to the root definitions of what a security versus utility is, a security is anything that's backed by an asset, right? Or has expectations for profit in the future. And the way utility tokens have been created, they've been created, yeah, sure, as a way to support the platform, but they do have expectations of profit, and that automatically puts you and labels you within the security token label, right? It's like you buying 100 memberships for $10 at a gym and then selling them for $200 each, right? Mm-hmm. That's an expectation for profit. Per the security law definition, that is a security, right? So now your gym membership, it became a security because you're selling it for expected profit. Right. Now, where the industry is heading, I think it just Inevitable, because from the way the financial sector is moving. If we want to see more innovation in the financial sector, which started with FinTech 1.0, FinTech 2.0, with the whole payment customer servers and more automation of the lending products, blockchain is the next phase in that industry. And for you to get to that, regulatory aspects and compliance need to come in. And that means actually admitting that your token is a security token. The market cap last year was, what, 3.6 billion almost from ICOs alone by the end of 2017. And there's almost 213 trillion, like God knows how much, in financial assets and securities out there. And if you want to bring all of those to the blockchain, the only way to do that is by securitizing and tokenizing those assets, right? So if we talk about how we go from 3.6 billion market cap to a 1 trillion market cap, well, it's by issuing security tokens. And that's why people are starting to notice that there's nothing wrong with labeling yourself as a security token. One, it's a lot of those traditional investments that we're used to are now actually liquid. Take the simplest example, venture capital, right? If I'm an LP that's going to participate in a venture capital fund, I have to wait 6 years, 5 years for a company to exit. In those 5 years, new technologies are emerging, and now I'm stuck and I'm locked down for the next 5 years. But if I tokenize a venture capital with a security token, right, now I can actually leave that fund whenever I want, or I can sell my position in that fund whenever I want. That token now is performing, it's liquid. And that's what people don't get. Like, yes, the liquidity is an important thing, but at the same time, for you to get that aspect of security tokens, the regulatory aspects and compliance need to come in. And that's why we package them as security tokens. And I think financial markets or traditional markets are starting to realize that from an efficiency point of view, from a compliance point of view, from a liquidity point of view, and just from a stability point of view, it's better to kind of start tokenizing those assets. And that's why you're going to see a growth and an influx in security token offerings in 2018 and definitely 2019, mainly 2018 being that movement. And we're happy that Corl is basically taking charge in the space.
So Sam, it sounds amazing. Believe me, I love the advancements. I love the technology. But basically, what I'm hearing though is that it's similar to, it's making it more of what we already have. It's okay. We have these utility tokens that came out in 2017 that were rogue and wild and in this new frontier. But a security token, we need to make it more like what we already have. And it seems a little counterintuitive. So, if you could just, help me understand what the benefit of the security token is versus going the traditional route.
Sure. I mean, I just gave you the simplest example, right? I mean, let's say you want to participate in a venture capital fund, right? I mean, right now, if you want to go and become a member of a VC fund or invest in a VC fund, traditional ways is you have to be an LP or a limited partner. Not everyone can get in. Like you and I can't simply just get into a venture capital fund with $5,000, right? There's minimums, there's certain investments that you have to make. So now let's just take that simple example, venture capital, which I'll have to give a talk about, and you tokenize it. So now every unit in that venture capital fund is a token, right? It's a security token, as we call, or I'm just gonna, for simplicity, I'm just gonna call it a token. Now anyone can buy the token, whether it's $1 or $5, whatever they want to buy. If you want to buy 1,000 tokens or 1,000 units, now it's easier for everyone. So it's kind of decentralizing that aspect of venture capital. It's democratizing it more. From a compliance point of view, now I don't need to have share certificate and paperwork that shows me what I own and what I don't. I have a digital share, which is my token. From a compliance point of view, it's no one can fake it. My share certificate, no one can take it away from me. It's immutable. And mainly from a liquidity point of view, which would tell me who goes into a venture capital space and can get out of it before a company exits. You can't, right? Unless the company is exited M&A or the company buys back the shares from the VC for a certain amount. I mean, that's the only way. So the advantage here of tokenizing is you just added liquidity on top of all the aspects that you added, right? So counterfeit, compliance, financial regulations. You're having that advantage of more dynamic efficiency in managing that process. Another thing is real estate funds, right? So imagine you have a REIT, and then not everyone can participate in a REIT sometimes. There's minimum amounts. And now if you have a token that represents that, you can simply move things around. Take the simplest example, which is a bit more futuristic if you're thinking about it. Right now, if you want to buy a house, right, you have to get a mortgage from a bank. But what if down the road, I can tokenize my own condo, right? So I'll create a token called Sam's condo, right? And then I can sell tokens in my condo, and I won't need a mortgage. I'll just buy the house, and everyone will have a share uh, in my condo, and then I'll buy back those tokens from people for an expected profit. Right? So that's the efficiency in the market that security tokens is adding. That's the decentralization that we talk about, the more efficiency we talk about, and definitely the liquidity we talk about, right? In the future, I don't have to pay $9.95 to buy a Google stock. I can simply just go buy a Google token, and I'll pay the gas cost for the smart contract, right? So you're going to see, and we're seeing a lot of companies that have done IPOs or already doing an STO or like starting to consider an ICO or a token offering, just because of the fact that actually the blockchain can introduce as efficiencies and advantages.
I love it. I love that example you just gave of being able to do things that we haven't been able to do. Creative financing basically is what you're talking about, that there's barriers to entry that currently exist. Now, I guess this is just a follow-up. You were basically talking about accredited investors versus non-accredited investors and the threshold that people have to go through to be able to participate. But as the security tokens continue to look more and conform to the traditional markets and to regulators and to what the regulators want, don't you suppose that those same rules are going to apply for the security tokens ultimately?
I mean, look, there's definitely, those limits for retail versus accredited investors are done for consumer protection, right? So, I criticize the equity crowdfunding aspect that do you really want to take $100 from everyone in the retail industry and then let them lock it up for 6 years and then move it? Probably not, because they can do so much more for $100 in a different investment. But yeah, true, you're still enforcing the accredited investors and retail investment limits. And I think there might be increases in those limits in the future, depending on what the company offers, right? If you go with a Reg A versus a Reg D, there's different limits, right? A public company versus a private company status, you have different limits for retail and accredited. But still, even the venture capital space, which I was talking about, like didn't matter if it was retail or accredited. It was completely offline and was only through accredited investors or wealthy individuals who can participate, right? I can't simply just go to a VC that I know. I was like, hey, you know what? Here's $100 and give me back my return in 6 years. That's never going to happen. So yeah, true. There's still limitations that we're enforcing on accredited versus retail, right? But at least now I can participate in multiple investments. Yeah, I might have a limit of 2,500, but guess what? I can put 2,500 here, 2,500 there, and investments that I could have never had access to before. Right. And again, we've seen a couple of scammy projects that popped last year, and maybe this year as well. I mean, you want some consumer protection. Unfortunately, not everyone is smart enough to vet deals, right? Not everyone trusts their gut feeling. Not everyone research a business deal. How many people or I know that is like, call me, is like, hey, I heard that Bitcoin is the next thing. I'm just gonna buy Bitcoin. They don't know what Bitcoin is, how to manage their Bitcoin, and if they lose it, that they lose all their money. There's a lot of hype in the industry that's going on, and in a way, we are in a tech bubble. A lot of people hate to admit it in the industry, but there is some bubble going on, especially in this space, and you don't want people to be super exposed to that, and that's why I think retail versus accredited investor limits are good. Now, are those limits low or high? That's for the regulators to decide. I have my own opinions that I keep for myself, just because I'm in talks with the regulators. But I think consumer protection is still needed, especially in this space, especially that the space is still being cleaned up. We're still adding regulations slowly. Regulations can be good or bad. I mean, it depends on how you see it. I see that if we want to move the financial industry forward, if you want to bring institutions and the traditional finance into the blockchain, you need to enforce those accredited and retail limits, because that's the only way the financial industry is going to move forward.
Sure. No, that makes a whole lot of sense. Okay, so and then again, this is the revolution that's happening, and I want people to understand what is taking place here. Explain what Polymath is. I mean, this was when I went to the North American Bitcoin Conference in January. This company was all over the place. One of the largest sponsors there, and huge. They had a conference, not too long later, and I mean, they came onto the map here in such a big way, and responsible for these security tokens. So explain what Polymath is and your relationship with Polymath.
Sure. Yeah, no, I'll try to give them justice because Polymath are our partners, and I'm familiar with their product, but I'm pretty sure they can do a better job describing it than I do. But Polymath, what they do is basically they're allowing any traditional financial asset to be tokenized, right? And what they call the STO, or the security token offering, or just security token. When you talk about security token, there's a lot of compliance and regulatory aspects that you have to follow, whether it's KYC or know your customer, anti-money laundering checks, and counterfeit terrorism. Resale restrictions, like who can buy the tokens after sale, who cannot, lockup periods. There's a lot of compliance and regulatory aspects that you have to embed. And we've seen some security tokens, like venture capital funds, that tokenize themselves, but they weren't really compliant at the resale because you can't enforce those rules, right? So what Polymath had created a protocol called the ST20 protocol, and that allows you to kind of embed all those compliance rules, whether KYC whitelisting, AML whitelisting, your limit as an accredited versus retail, all within the smart contract. So now, if I'm issuing my own token, I have to be whitelisted within their smart contract. If my Ethereum address is now whitelisted, I can actually purchase a security token from that issuer. But if I'm trying to buy it from someone else on the secondary market, like even a decentralized exchange, if my Ethereum address is now whitelisted, I can't even buy it. Let's say I've done the whitelisting and the issuer have labeled me as a retail investor. I won't be able to buy more than $2,500 US or Canadian, whatever currency you're in, right? So we'll enforce all those financial regulations, compliance rules into the smart contract, or what they call the ST20 protocol. So what I like to call like an oracle, right? So now every time you want to interact with the issuer's smart contract, your Ethereum address is being verified for all those rules to see if that transaction can go through or not. They're creating an industry basically to tokenize the 230 trillion or more in the financial industry, and you're going to see more come on the platform soon. Corl is lucky to be partners with Polymath. We work closely with them. Trevor and his team are great, and basically Corl is going to be the first issuer on the Polymath platform, right? So we're launching our own token, security token, once regulatory approval is granted, and that will be happening by leveraging the Polymath ST20 protocol.
Sam, so, and then to remind people, utility token, what I tell people, if you go to Chuck E. Cheese or some sort of arcade, you purchase a token, you get to use it. There's utility in an ecosystem for that token. Now, a security token, we're talking about tokenizing equity, a representation of a business, something that will actually pay you a dividend. So directly connected with the success of the project. And as
it's not necessarily just equity, because a security. The security is anything that's backed by a financial asset, right? Or like an asset in general. So that could be equity, so like a share in a company. That could be a royalty. So a token, like even if the token doesn't represent anything, just you having a token will earn dividends on it. That's a security, right? It could be a debt token where for every dollar you give me, I'll give you back $1.15, right? So that's a debt token with an interest. So that is a security token. It could be a membership in a real estate fund, which basically is a share as well, right? That is a security. It's not necessarily just equity in a project. It can be anything that has financial gains or backed by an asset, right? So I can have a token that represents the land, right? And that's a security token.
So, and to be clear, it doesn't necessarily need to be a token where you're paid in cryptocurrency. It can be a cryptocurrency decentralized token, but then you're paid in US dollars.
Yeah, the token could be just like a digital representation of a share certificate, right? Instead of having to issue share certificate, your token is a representation of that, and then people might just still pay you in fiat. I don't see why people want to do that, like have a token and pay you in fiat. But assuming so, that's still, regardless of how you're getting your gains, you're getting gains on it. That doesn't matter.
So will there be a way for there to be a combination of traditional equity and this sort of security token with, let's say, a company? It's huge, and I'm not sure if they would go this direction or not, but like Apple or Coca-Cola, and then say, okay, we're going to take a portion of our business and tokenize it.
Yeah. Apple can simply launch tomorrow a new class of share and tokenize it and say, this is a new class of share called Class E. and then we're going to tokenize it and make it public, right? So we're going to do an STO for the Class C. So now you have the Apple stock and you have the, I don't know, Apple crypto stock, right? And then Class E shares, or what's represented by the token, will earn dividends from Apple's profit on quarterly basis or yearly basis, right? So that can be done. And I think a lot of those big players are going to start looking at it at this point.
And so, Sam, if you would, explain to everyone, what is Corl and what are you guys focused on? Obviously, you guys are a first mover, and we're talking all about the platform, the fact that you're tokenizing your equity. So, if you would let everyone know what you guys are doing with the business and exactly how the token that you will be issuing down the line will represent your business.
Exactly. Yeah, a lot of people are like, oh, you're first mover advantage, you're a security token offering. So what do you guys actually do? So what Corl does is basically we do royalty or revenue sharing investments in startups and small businesses by leveraging, basically we created a platform to do that, and that leverages machine learning and big data. So a business would be able to apply with us. Within 5 to 10 minutes, we collect over 10,000 data elements that allows us to crunch it and kind of come up with an expectation of profit, risk analysis, and growth projections. So connect like bank data, accounting systems, and payment processor data, their e-commerce like Shopify or Amazon, and all of that to kind of assess how the business is doing and what's the projection rate and how we can fund them. So they get a royalty or a revenue sharing investment from us. Unlike equity or venture capital, where you sell a share or a seat in your company, with revenue sharing, you're not. You keep and maintain control of your business. You pay us back through a percentage of your top line revenues. If you're getting in $50,000 every month, and we've given you, let's say, $300,000, you pay us back through a percentage of that revenue until whatever principal we gave you plus a premium is paid back. We call it the repayment cap. So a simple example would be, we fund the business for $100,000. We agree with them from day one that they're going to pay it back as $150,000 by taking 5% of their revenue on a monthly basis. So we're basically funding the 99% of businesses that VCs and private equity says no to. Not necessarily because this 99% of businesses are bad. It's just they don't have the home run that the VC is looking for, the 20, 50x return, right? So they don't have that. Not every business is an Airbnb or an Uber or the next Apple. There's a lot of, how many businesses or e-commerce or like development houses or just small businesses that have a recurring revenue that's consistent and they're stable, but they just need that small injection of capital to stimulate the growth. And that's where we focus on. Where we tokenize things is we're going effectively public as a company, and the Corl token will represent a share in our company, and then token holders will receive dividends, right? So people now are indirectly investing and helping those startups by investing in us because the revenue sharing product is our flagship. Down the road, there's different ways of how we want to embed technology and take Corl, and we're going to be releasing and announcing our vision and what we call the Corl Manifesto over the next few weeks. That will kind of outline how revenue sharing is just the start for us and where we're heading. A Corl token and a revenue sharing product just the start, but that token is definitely going to have more value down the road.
So that's interesting. I know you can't talk about price or what the token will eventually do, all of those things, but maybe more on a general basis. The company needs to market what it does, as to other businesses, its service, but then for the token to have an efficient price that represents its true value, you guys got to get out there and you got to market the token too.
We can once regulatory approval is granted, right? So once regulatory approval is granted and we know exactly the timeline, we can market that just the way a public company or a private issuer would. We can't simply just put Facebook ads and marketing campaigns for that. You have to go through the proper regulatory aspects of providing marketing content, like CDAR, for example, which is basically for public companies. They publish their content. There's certain rules that you have to follow for that. As a business, we get to market our business model. We get to talk about the tokenization from a technology point of view, but we don't never talk about the token sale, right? We talk about what the token does and represents and how it's being used from a tech point of view. And we've been open about it, right? The token represents a share in Corl. As a token holder, you earn dividends. At this point, we can't expose token price, token timeline, and how you can participate or how to buy.
Yeah. And this is amazing. We are
That's the
witnessing.
difference with security tokens. Right? It's
Yeah.
like if I was running a utility token, I'll be telling it's like, hey guys, just go to this Ethereum address, send some money, and let's do it.
No, I mean, this really is amazing, Sam. Really where we are in history, the pivotal changes that we're seeing. And again, you guys are a first mover in this for something that will likely be widespread going forward here. And especially if we start to see a lot of the benefits, because I feel like the world hasn't really been exposed to the benefits of what security tokens are going to offer yet. And as soon as that starts to be realized, the momentum will create momentum.
Exactly.
So that's really exciting. So congratulations to what you're doing. And, if you would like, please give us a little bit of, some closing thoughts and, ways people can follow you or learn more about what you guys are offering.
Sure. Yeah. Actually, so first of all, thanks for giving us a chance to be on your channel. So there's one thing that people need to keep in mind, that with security tokens, things will be slower than they were used to, right? I mean, uh, people are used to a utility token. You just launch an ICO. You're used to those social media campaigns. You send your Ethereum and you're done, right? No KYC, nothing. People need to keep an open mind that this is an evolving industry. What Corl and Polymath are doing is heavily regulated, and we're working on getting at least Corl is getting all the regulatory approval in process, and that takes time because we need to do it right. We know that we're setting a precedent in the industry, and we'd rather go slower and do it right than screw over the whole industry that's going to come after. If that means we're going to take some daggers in our back along the way, let it be, because what Corl is going to do is going to set precedent in the industry. If you want to know more about us, join our Telegram group at Corl Token. We're actually one of the growing crypto Telegram groups. We're over almost 26,000 members. That's just straight after Polymath and Ripple on Telegram. So like we surpassed EOS and a lot of the other crypto projects on Telegram. So that's a huge step for us. But like if you want to know more, just go to our website, Corl.io. We're actually launching a new website next week. And we're launching our beta for business applications on Monday. So if you're a business, want to know more about us, and you want to apply for revenue sharing investments, check it out. And if you have any questions, just drop us an email or message at Telegram or hello@corl.io.
Sam, thanks for coming across the street. I really appreciate your time with us.
So thanks for having me. It was fun talking to you.